Hi everybody, Alex Deploy here from Expert Forex, and the market's been pretty wild recently with the intended rate changes in the US, but RSI traders should have done pretty well in the last while, certainly ones using the Barry Thornton method that has been shown recently. But today what I'd like to do is I'd like to give you some tips on how to invest in ZuluTrade. And these tips will really revolve around how to select Forex traders to invest in. So I know some of our clients are making some fundamental mistakes in those selection processes. Also, they are lot sizing inappropriately. So I hope you enjoyed this video. Right, so in this video, we're going to be looking at selecting traders to link our accounts to when using ZuluTrade. And I'm going to give you some tips on how to select those particular traders. So here we go. We're on the main website of Money Making Forex Tools, and linked accounts are investor tools. So you go to the investor menu and you will find Forex linked accounts linked there, and then there's a pop out for ZuluTrade. So click on that pop out and you will then go to the ZuluTrade block page. All our block pages also have the ZuluTrade banner going at the moment. So if you want to link to their website, you click on that particular banner, or you can click on the link supplied within the block. So those are the two methods. So I'm going to click on the banner, and it will take us to the ZuluTrade website, and we're going to click on traders because that's what we want to look at the moment, and it will bring up details of all the various traders, where you can set the amount of information that is being displayed, and you can set it out as the most advanced or simple. I'm setting it for the most advanced because our discussion will really cover as much information that is displayed. So all right, let's start looking at some of the information that is displayed. And one of the first things that I look at personally, and obviously if you're not too worried about it, don't pay too much attention to it, but I look at the maximum number of open trades that a trader has. In this case, their number one trader has 17 open trades. Now that's quite a lot. I personally do not like going beyond 5 or 6. Now 17, it means that you need enough margin in your account to firstly finance 17 open deals, and then secondly you need enough money in your account to finance any losses that those 17 open deals might have. They're not always negative, but in the majority of the cases they will be negative. So first thing that I look at is the number of open deals, and you need to seriously consider the size of your trading account if you are going to use a trader that uses more than 5 or 6 open trades. Then the next factor that I have a look at is the maximum drawdown. Why that is important is that is the amount of money that you need extra in your account to fund losses over a loss-making period. And you can see some traders have pretty large ones, 25%, and others have pretty small ones, 4%. But you would then look at the maximum drawdown. There is no guideline at the moment. I sort of work around the low 10s are pretty good. 15 is not too bad. So anything below 15 for me is okay. Anything above that, it needs a closer look at all the other factors. Then the third area that I look at is the amount following this particular trader. For instance, in this particular case, there's $1.1 million following this particular trader. And I would look at that, and basically what that is, that's a vote of confidence from other investors in that they are happy to invest in this particular trader. So I use that as a guide, and none of these are disqualify a trader or qualified trader, but I do look at all these factors, and if there's very little following a trader, then what it means is that the trader is either very new or he's had a lucky run. So if you look at trader 2, who has very little following him, although he has a nice drawdown of only 4% and also a maximum open trades of 4, those are all very good. What that means is that traders aren't confident with him. Now, why aren't they confident? And just one of the things that one of the next thing I look at is the graph of the actual trader. When a graph has a very sharp rise, like we have in number 2 here, very sharp rise and then an evening off, it means that his whole history is based on a very successful little period that he had, and then it evened off, and that's not that great. If you have a steady upward graph with some drawdowns but still upward sloping graph, that is most probably a better graph, and we'll look at the graphs in more detail. I'll show you how to look at that, but certainly number 2 would put me off in spite of him being 4% drawdown and 4, his rapid growth in that initial period is a worry. It's actually a worry because his whole system is based on being around at the right time. So an investor that saw this fantastic growth, then invested, would have actually lost money further along. Now, the next item that I look at, and this is also a pretty important one, is the average number of pips per transaction. And why I look at that is that ZuluTrade does have slippage. In other words, you don't always get precisely what the trader is getting. There is sometimes some slippage involved depending on which broker you're using and which broker the trader is using. For instance, the traders' brokers are shown on this schedule. So you can see the number 1 was the Pari. The other one is AAFX. Now that's not Apari UK, that's Apari RU. Then you have ZuluTrade. Now ZuluTrade is AAFX, I think it is, the same as that. So FX Open. So they all have an element of slippage, and we'll look at that later, because that is another factor that you need to consider, is how does your broker account compared to the trader's broker account. And it's very important at times to align yourself with the trader's broker. If you want to commit to a trader, then rather open an account which is the same broker as that particular trader. Now, coming back to the average pips, you'll see that, for instance, number 1 has got 7, the second one has got 19, and so on. Now, I would not invest in a trader that has less than, and 7 is most probably the borderline, less than 6 pips per transaction. Ideally, you want that to be double digits. You want it to be above 10, and the reasons are the slippage that can take away some of your pips. So if your slippage is most probably 3 pips, that means that if you invest in this trader, you're not going to earn 7 pips, you're going to earn 4 pips. But it's a lot safer for the second trader, where the average trade is 19 pips. There you can afford a 3 pip slippage, because then that drops it only down to 16 pips per transaction. So average pips is an important number, and in this list you can sort any of these factors any way you want. So if you want to sort it by let's sort by average pips, there's some guys here that are earning 70 pips per transaction. Now that's pretty good, 17 pips per transaction. And you can also sort it the other way to see, and there's a few minus 1 and 1 and that type of thing. Now I would stay away from those low ones. I'd really only look at the ones over 10 to start with. And if you can't find any ones over 10, then only do you change your trader. So I'm just resorting it back to 1. Okay, so we are still looking at the items that I look for when looking at looking to invest in a particular trader. I would then look at how long the particular trader has been around. Now, for instance, number one has been around almost 2 years, so he's an established trader. His track record is more reliable than, let's say, a trader that's only been around for 15 weeks. 15 weeks, not too bad. I wouldn't go much less than 13 weeks. I would, and you'll see most of these guys have been around. There's one for 13 weeks, but you want a trader with a reasonable track record. And if the track record is short, then you want to have a good look at the graph, because that is the situation that could arise with a short track record. Then the other factor that I would look at is the followers. Now, the followers again are a vote of confidence by the investors. So if you've got a lot of investors following a particular trader, then it also is a vote of confidence, very similar to the amount of money invested. So you would have there, if you then sort it in follows, I'm just going to sort this one. There's number 3 has got the highest followers, 5,000 people following number 3, and then it drops right down to 2.7, and so on and so on. And that again I would take as a vote of confidence that is most probably, those are the traders that investors are more likely to like. Then from an investment point of view, you want to have a trader that's giving a reasonable return on investment. Now, this return on investment percentage is an annualized figure. So if you see somebody who's only been around for 15 weeks, then that amount has been annualized. So it's basically said if the trader continues trading the way he does, you'll get an annualized return of 200% or whatever. So let's have a look at, let's sort this in terms of annualized return, and you can see here we've got a 2,500% return. Again, this trader I would be a little bit wary because everything seems to be based on 2 or 3 transactions here and then nothing much after that, but you'd have to have a closer look at that trader in general. Then let's have a look further down. We've got one of over 1,000. Again, 15 open trades, a lot. That I would worry about that. This particular one looks really good in terms of in general. We've got a nice annual return. Been around a reasonable amount. Only has one trade at a time. Now, this is the kind of trader that is important. If you can find that kind of guy that's giving you a return like this, I think then you're onto a winner. Let's have a look what else is quite positive about this particular trader. It's very low drawdown, and the maximum drawdown in pips, which I haven't discussed yet, is relatively low. You'll see some of the traders are 660 and 150, and 890. Now again, that is a factor to take it. You don't want to follow a trader who will go over almost 900 pips down. And let's just go down here and see if there, I mean, there's one that was 3,000 pips down. So you really don't want to follow that kind of trader. I hope you're getting a good feel of the type of things that indicate the amount of risk involved in investing in a particular trader. Now, interestingly enough, they do reflect win percentage, and a lot of people would rather follow somebody who's got 100% win percentage than a lower one, and I don't actually personally regard that as a major problem. If you have a win percentage, anything over 40% is actually, you can make a lot of money if you have a win percentage of over 40% in this market. So you can actually go down here and have a look at their win percentages. Obviously, they do give you a sense of security in that you think, oh, 88%, this guy's really good. But you need to look at, although his win percentage is 88%, his biggest drawdown was 1.9 thousand pips, and he has 18 open trades. I wouldn't touch this guy, although he has an 88% win rate. I would certainly select this trader here, Success System, with a 45% success rate. His drawdown is small, his maximum negative pips are only 80, and he only has one trade open at any time. His statistics look a lot better to me than somebody like that has an 88. So don't be blinded by a high win rate. But it is a factor. You need to just consider that high win rates are actually also a very high risk. All right, the number of trades don't really matter that much because they've been discounted in the average pip per trade. That's a much more important ratio to worry about than how many trades the trader does. Okay, so let's have a look at some additional information, and one of the things that we'll look at is, and let's compare Coffee Shop with Success System 3. Now I'm going to click on Coffee Shop just to get some more information, and it will open a lot of information on Coffee Shop. Now the first thing here, you see a flat period, a huge rise, and then a flat period. That already puts me off a little bit because the whole success of this trade is based on one trade. Just an observation at this particular trade. So the other thing I look at is, at the time investing, what is the current open trades? Now this particular trade is minus 625 pips, so he's a risky trader, and his worst trade was 340. That's a single trade is 300. So again, you can assess risk very carefully. Now, one of the things that I come and do is I look at the necessary minimum equity is 250. So in other words, they say don't even look at this trader if you don't have $250 in your account. So that is a big number, and we'll look at some other ones, and unfortunately they don't put them in the table of results so you can see them quickly. You have to actually open the results to see this particular statistic. Now here you only need $43 to invest in this particular trader. Now why is that? The main reason for that is that he only has one open trade at a time. You don't need much capital for margin and to finance open deals. This guy, if he's got a loser, he stops out and finds another trade. This kind of profile is a much safer profile from an investment point of view, because you don't need all that much money and your maximum drawdown is only 8%. So again, average pips are over 10, win rate is 45. As I say, that's fine as long as he's making profits, as long as his overall profits are nice and high. That's good. And his chart is dependent on a couple of winning streaks. You can see there were about 4 or 5 winning streaks that made this guy successful. So what you've got to do if you invest in this guy is you've got to prepare to stick around for quite a while, for a month or two, and then he'll have a winning streak. Then you stick around again, then he has a winning streak. Then you stick around, winning streak. Stick around, winning streak. Stick around, ooh, then he goes, and then a winning streak. So you must look at the chart to realize that when you invest in this trader, you've got to have the patience to stick around for at least 6 or 7 weeks and wait for him to have his winning streak. Now, another factor that I do look at is when you look at a particular trader like this particular one of the first things is slippage. And here you can see, because he uses Gain UK, the slippage on that particular account is very low. But if you were, for instance, using an Forex account, your slippage would be very high. So always evaluate, whoever you're investing in, evaluate the slippage profile of your particular broker's account. You definitely don't want to invest in this guy using an Forex account, for instance, in this particular case. All right, so let's have a look at what other information is quite important. A lot of the information is repeated, and as I say, necessary minimum is one of the ones that I then look at. Right, so we've seen that this particular trader only requires $43 to be invested, to invest in him. Your annual return is pretty high. This guy, we need $250 to invest in him because he has a lot of open deals. And as we discussed, anything over 6 or 7, you don't want to actually look at that particular trader. Just looking down this list, this too fast, too furious trader looks pretty good. He only has 2 open trades. He has a small drawdown of 9%, and he has a reasonable win rate. But one of the things that would worry me about him is that the pips, the average pips is 5. As I said, expect slippage with ZuluTrade, and if the average pip per trade is low, you could run into problems with that particular trader. The idea of this video is to just show you how you should be selecting your investors. Okay, so let's have a look at Success System 3 in a little bit more detail. Then additional information that they provide is the profit chart, and then there's also the performance chart, which actually gives you the monthly performance. And here you can see that there was some steady growth since he joined, and he has now gone down in March. So you need to look for consistency in terms of monthly performance. And again, you can compare investor to trader to trader to see what the monthly performance is. Drawdowns, another interesting chart. What this actually says is that the orange is the profit, the blue is the maximum drawdown, and this guy has very small drawdowns, which is one of the things I like about him. And he mainly trades he only trades the euro. So that's additional information that you should look at before selecting a trader to link your account to. Now, you can link a demo account or you can link a live account. I would say, look, trade ZuluTrade for at least a month or 2 on a demo basis and get a good feel of what goes on with these traders. And also create a portfolio of traders. Don't just go for one trader. Get a big demo account and invest in 5 or 6 to get a feel of how the results come through. Then I would also look at some of the comments that come through. Now, in this particular case, there are no comments on this particular trader because he's fairly young. Also, when he's doing well, a lot of people don't comment. Comments normally come through when somebody's doing very badly. So but certainly have a look at the comments that come through. Then there's another section. You can also study his trading account to see what his trading is like, how much money he gives back, because here's, for instance, the situation where he was 110 pips up on this particular deal, and he eventually only cashed in at 62 pips. So he does let some of the money slip a bit, and you can have a look at slippage and all kinds of other things on the account. You can look at his open positions, which are this. Then you can look at live followers. Are there actually followers that are making money by following this trader? And you can see he is fairly new, and some people have joined and are making a little bit of money, but in general people are not making fortunes following this particular trader. And let's have a look if there's a reason for that. And that might be because what people do is they look at a trader and they say, oh, look how well he's trading, and right at the peak, that's when they start investing. So then they invest there and they say, oh no, this guy's doing so badly, oh no, I'm going to take my money and invest in another trader, and they get out. So then suddenly he shoots up. So then they look at his track record and they say, oh, this track record isn't right, because when I invested I made a loss. But what you find in ZuluTrade is a lot of investors get in when the trader is overperforming, and they get out when the trader is underperforming. And what that means is they actually miss all the good runs. They would have missed that run, and they would have missed that run. And that is a very common thing, not only to ZuluTrade, but to Forex trading as a whole, is you trade your system, trades, and oh, it's not doing well, I'm going to change my system and go somewhere else. And you don't even know that your next trade might have been a huge winner and you would have caught the next upswing on the equities chart. So just bear that in mind. That is a very common problem. People invest at the high times and they get out at the low times, and that way they will never make money. Anyway, I think I've given you a good idea of the type of things that you need to look at. It's not that easy. You need to compare, you need to create a short list, and then you need to compare them to each other, and as I say, demo trade them, and then finally, if you start building up confidence, then you start trading live. If you do have any questions, this video will be on one of the money making Forex tool website pages. Just use the comment section down there to raise any questions or comments on this particular video. Thank you for watching the video, and cheerio.